to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want to keep up with me when I'm not on YouTube, I'm going to ask you to get down in the description box and click on that Richard Fain Millionaire Mentor Instagram link. Give me a follow on Instagram and send me a DM. Let me know that you're rocking with me so I can say thank you. A lot of you guys have been following me on Instagram on my old Instagram page, which is Richard Fain 28. That page no longer exists. So if you'll do me a favor, come on over to the new Instagram page, which is Richard Fain Millionaire Mentor. Like I said, a direct link to that Instagram page is down in the description box. So get down there, check it out. And like I said, give me a follow and then send me a DM to let me know you're rocking with me. Guys, it's been a crazy week. A lot of stuff going on. A lot of questions I've been getting from a lot of people about paper assets and, what's going to be happening over these next several months. Will we see a stock market crash or correction? I like correction better than I like crash. Should we be actually buying stocks right now or ETFs when we have, all three major indexes basically hitting all-time highs every single week? Should we be buying right now, or should we be on the sideline and all in cash waiting on this inevitable crash? So I'm getting all these questions. And you guys know, I'm not an expert here. I'm not a financial advisor. I'm not a CFP. I'm not qualified to tell people anything, right? At least that's what the experts would say. Dude, you're not qualified. You listen, man, you don't got no letters after your name. You ain't got no numbers after your name. You ain't got no letters before your name. You ain't qualified to tell nobody nothing. And they're absolutely right. I mean, I'm not qualified to tell anybody anything other than on this platform, this YouTube platform, I'm allowed to give my opinion. That's all it is. Now, whether you sit on the sideline or put yourself in the game, that's up to you, not me. I'm just a guy giving his opinion. Correct. I'm not an expert. Nope. But I built wealth anyways. I didn't have to be an expert. I still built wealth anyway. So I do have a perspective, an opinion that I get to share on my YouTube platform. And that's all I do, guys. So please understand, when I'm talking about stocks, when I'm talking about ETFs, when I'm talking about real estate for income, businesses, side hustles, listen, I'm going off of experience. Not because I went and was formally trained to talk about any of this stuff. Because I'm not formally trained to talk about any of this stuff. I'm not on CNBC. I'm not on Fox News, right? I'm not some world-renowned billionaire investor. I'm just a regular guy, just like you. The difference is, from all of those people that I mentioned, I am taking the same route you're taking. I wasn't born with any wealth. Nobody passed any wealth down to me. Nobody said, hey, let's put him on TV. No, I just one day picked up this camera, my iPhone, put it on a little tripod, and I just started talking about my experiences. So that's all I do on this channel, guys. I'm not an expert. I don't try to be an expert. I know a lot of people ask me questions and I have to remind them I'm not an expert, guys. I'm just like you. I'm just like you. I go out and do my own little research. I come up with my own opinion, and then I execute, right? I've had more wins than I've had losses, and that's it. So we're going to dive into this thing that we're going to be talking about today, which is we're going to talk a little bit about why you should consider, once again, guys, why you should consider buying Nvidia before June 26th. We're going to talk about that. We're also going to talk about, is buying stocks when the S&P 500 hits a new all-time high a smart strategy? We'll talk about that too. And then we're going to talk about Chipotle. Should you buy Chipotle, right, the stock, before June 26th, which is 50-1 split, right? And really, I'm talking to myself, right? I'm sharing it with you, but really, that's a question I'm asking myself. Should I buy Chipotle before the 50-1 split, or should I wait? So those are the three things we're going to talk about. Why you should consider buying Nvidia, right, before June 26th. That's number one. And again, guys, please understand this. I'm not telling you to buy Nvidia. I'm just having a conversation here. I'm just having a discussion. So I don't need nobody email me, oh, you told me to buy Nvidia. No, I didn't. I'm just telling you exactly what the article says. So call these guys who wrote the article. I mean, nobody don't bother them. So, they're giving their opinion. I'm giving my opinion, right? But before we get into that, let me run through a couple things. My website, www.richardfain.net. Second link down in the description box. Go check out the website. Got some wonderful digital products. So go check that out. Over 175,000 of you guys have already went over to the website and have, a lot of you guys have bought digital products, right? These financial digital products that basically help you guys from a information standpoint. So let's just say you're a person that wants to, get a better grip on their credit score, and they want to learn how they can build up their credit score on their own without giving some guy $1,000 to say they're going to build it up for you, right? Oh, give me $1,000 and I'm going to put a trade line on your account and you're going to get 20 basis points higher, 20 points higher. That's not a real, here's the thing, guys. You got to learn why your credit score is important and how to maintain a good credit score. Those are things that you got to learn. Not pay some guy $1,000 and get you a trade line so you can get 30 more points added to your score so you can go out and buy a $1,000 a month car. See, that's what a lot of us do. We don't want to learn why the credit score is so important. All we want to do is pay somebody, get a trade line. Now I can go out here and get further in debt. Why? You go get further in debt because you ain't learned nothing. You mismanaging your credit. So all I'm telling you is learn the proper way to manage your credit. And then you can use that good credit to leverage it to build wealth. Stop leveraging your credit to buy depreciating assets. We want to leverage our credit to go out and buy a depreciating asset that takes money out of our pocket, don't put no money in our pocket. Learn to leverage your credit to put money in your pocket, right? That's what I'm talking about. Let's learn how to use our credit score and leverage it. Why? Because it's a financial tool. We should be leveraging all of our financial tools to build wealth. But let's not leverage our financial tools to put ourselves in debt and poverty and living on, more than what we make. Let's not do that. Let's use this credit to build wealth. Let's use this credit to leverage it to build wealth, right? So that's one of the products that I got on the website. I also got investing in real estate with little to no money down. A lot of you email me, Richard, I want to get in real estate. Where do I start? I'm going to send you right to the website because that's where you start. There's nobody going to hold your hand and show you the ropes. Nope, you got to go ahead and do what? Get you a certain amount of information, digest that information, and follow the steps, right? You got to follow the steps. That's what you got to do. So 10 digital products over there to help you do that, guys. Go check it out if you don't mind. Do me a big favor. Go check out the website, www.richardfain.net. And again, second link down in the description box. While you're there, consider joining the private mentorship club. That's the only place on the internet that I'm doing mentoring. So if you want to be a part of that group, go through the website, hit the join button, hit the membership button. It'll be one of the two, depending upon if you're on your phone or if you're on a laptop or something like that. It may be a little different, but one of those buttons will be there. It'll say membership or it'll say join. And that's where you would go to join the private mentorship club. And like I said, that's the only place on the internet that I'm mentoring, right? It's through that private mentorship club. So if you want to be mentored by me, you also want to be a part of 600 other people that are on that platform with varying degrees of financial literacy, varying degrees of, investing in paper assets. We got some beginners, we got some middle of the road folks, and then we got some more advanced folks. But we're all over there headed towards one goal, pot of gold at the end of the rainbow. So if you want to be a part of that, like I said, get to the website and check it out. Last thing, and then we're going to dive in, Moo, my self-directed brokerage app that I'm going to be using over the next 10 years to quadruple my net worth. That's the first link down in the description box. It's the Moo link. Now, if you open a Moo brokerage account, whether you're 18 to 80, it's not too late, guys, to use paper assets. I'm going to talk about that. To use paper assets to potentially build your wealth. It's not too late. 18, of course, it's not too late. And in 80, it's not too late. Anywhere in between, guys, if you want to move your financial situation, your net worth higher, then guess what? You're going to need a brokerage account to be able to do that. And for a lot of you new people who don't know much about brokerage accounts, or maybe you got an old dormant one from somewhere that you ain't using in many years, and you're ready to start considering paper assets, then the Moo brokerage app is the one that I use. Like I said, if you open that account, that Moo brokerage account, if you click on that link and you open it and you put $100 in there, they're going to give you 5 free stocks. If you open it and put $1,000 in there, they're going to give you 15 free stocks. And then all you got to do is send me an email through my website, www.richardfain.net, and just say, hey, Richard, I opened the Moo account. I funded it. Could you send me the tutorial video so that I can learn how to use the brokerage app? And then would you send me your wealth transfer blueprint 1.0, 2.0, outlining the investments that you're making so that I can see what you're doing, because I may want to just do what you're doing. I may not, but I may want to. So I want to hear your justification why you're buying this stuff, why you think it's important for you to put your money in. I'd like to know that, since I'm kind of brand new at this and I'm kind of following, and I'm more than happy to do that, guys. But you got to open the Moo brokerage account. Like I said, first link down in the description box, and then you got to send me the email through the website. Well, all right, let's jump on in, because I ain't gonna hold y'all long, maybe about an hour, and we're already 15 minutes in, so about 45 more minutes, but I got a lot to unpack. So if you're interested in what's going on in the stock market based on my opinion, I'm gonna walk you through it. And I'm gonna walk you through why I continue. At the end of this thing, I'm gonna walk you through why I continue to invest and just tune out the noise. I'm gonna walk you through how I just tune out the noise, right? So if you stick around, you'll hear how I tune out the noise, and I just continue to double down. And I believe that's the strategy that's gonna take me to that pot of gold at the end of the rainbow. Let's start off with Nvidia, since that's the red hot stock right now, the darling of Wall Street. And let me tell you something, guys. You got about $39 billion betting against Nvidia stock, 39 billion. So that just tells you, man, it's a lot going on with this stock, man. It's a lot of people betting for it, and it's a lot of people betting against it. And you can tell that in the volatility we experienced this week, right? You could tell that, right? We experienced some heavy volatility on Thursday and Friday. Monday and Tuesday of last week was jamming. And then we had Juneteenth on Wednesday, had that holiday. Came back on that Thursday morning, that thing was $140 a share, and by close of business, it was all the way down to, I believe, 130. And then the next day on Friday, the thing dropped all the way down to 126. Closed at 126. So we'll talk about it. But let's dive into why a lot of folks believe you should be considering buying this stock. And again, with that Moo brokerage app, you can, right? But here's why a lot of people think you should be buying it, including myself. And again, that's not trying to tell you what to do. That's not trying to be your financial advisor. That's not trying to tell you anything's guaranteed. I'm just telling you, if you're trying to move your net worth upward, you better find something to put it in to multiply it. You putting it in your savings account at your little bank ain't gonna do it. No, it's not gonna do it. It's not gonna do it. So you gotta find an alternative. You gotta find an alternative, and this might be an alternative for you. So listen up. 3 reasons to buy Nvidia stock before June 26. Artificial intelligence is a truly revolutionary technology that has captured the imagination of investors like few things before. This is a double-edged sword, though. Even if the tech really is here to stay. If we learned anything from the 2000s, right? You know what happened in the 2000s? That's with the dot-com bubble, right? That's when everything, the tech started taking off, and then all of a sudden it sputtered. It looked like we were going to the moon, and then we came back down to earth and crashed. That was the dot-com. And a lot of people got hurt in that dot-com bubble. Probably some of these baby boomers got hurt. Maybe some of your grandparents got hurt. When I'm talking about financially, not like physically hurt, but financially, maybe they had money in the dot-coms. And it just didn't take off. It looked like it was going to take off, and then it just kind of, right? So a lot of people got hurt in that. And that left a bad taste in a lot of people's minds, right? A lot of people are like, that tech thing coming again. I don't know about that. Older folks, us younger folks, well, I'm 56, I ain't that young. But younger folks, you know, these 20s, 30s, they don't know nothing about that, right? They don't know nothing about the dot-com. I do because I lived through it, right? Some of your parents or your grandparents, they lived through it. So they know what happened in the tech when the tech was trying to get out, boom, it crashed. So a lot of people still got a bad taste. So even if the tech really is here to stay, if we learned anything from 2000, it's that too much hype around new technology without the economics to back up sky-high valuations is dangerous territory to be in. And believe it or not, that's what you got. Some people are saying that. They're saying, hold on, guys. Hold on. Let me rewind you back to the 2000s, early 2000, 99, 98, 99, early 2000. Let me rewind you back to that period where we had this tech thing and everybody thought it was the best thing since sliced bread. And boy, people lost a lot of money. We think this thing gonna be the same way. Now, you might feel that way, and that's okay, right? If you feel that way, keep your money in your CD at the bank. Keep your money in your money market at the bank. Hey, nothing wrong with that. Nothing wrong with that. I don't want to draw too close a parallel here. There are plenty of reasons to believe this is not dot-com bubble round 2, right? So there are plenty of reasons to believe they're not the same thing. Not the same thing. But it is always prudent to maintain a healthy skepticism during a boom. And that's absolutely right. Well, Richard, what are you talking about? You're on here every day talking about stocks. How's that a healthy skepticism? Well, I got 80% of my money in S&P 500 and ETFs. That's my skepticism. Because see, if I wasn't skeptical, I'd be all in this thing a hundo percent. I'm not 100% because I am skeptical. And I am I believe, a prudent investor. That's why I got 80% of my money in things that I don't have to be the expert, that are diversified in other industries, not just the tech industry. So I do have some skepticism, but that don't mean I'm not gonna take advantage of this big old watermelon right here. This is a big old gigantic watermelon. I can't miss this, but I'm still not gonna put all my eggs in one basket. That's where I'm skeptical, right? That's why I keep 80% of my money in diversified equities. Diversified equities, S&P 500. 11 or 12 industries are represented in that fund. So if the tech industry goes off of a cliff, them other 10 industries got a chance. Therefore, my 80% of my money got a chance. I'm not gonna put 100% of my money in just the tech industry. Now, you might be able to do that and go to sleep at night, but I can't, right? I'm not gonna lose everything I work for. So I'm gonna have a healthy skepticism. That's the reason I got 80% of my money in ETFs, right? And not 100% in any individual stock. And I don't recommend you have 100% of your money in individual stocks. Okay, let's keep moving. Let's keep moving here. I don't want to draw too close a parallel here. There are plenty of reasons to believe this is not a dot-com bubble round two, but it is always prudent to maintain a healthy skepticism during a boom. All eyes, skeptics and believers alike, are on Nvidia upcoming annual shareholder meeting. That's right. It's coming, baby. Matter of fact, it's next week. It's next week. Let's talk about it. On June 26, 2024, the figurehead of the AI revolution will hold the meeting, discussing strategy and holding votes on action items like board approvals. Typically, annual general meetings don't move the needle as much as earnings reports do. But it's still an important event that could help shed light on what the future holds for Nvidia and the market as a whole. Because right now, guys, technology is the jet fuel to the market. And the market being the rocket ship, right? Technology is the jet fuel for that rocket ship. Technology is the jet fuel. And really, when you talk about technology, you gotta start with Nvidia at the top, right? So an annual meeting is a big deal to investors. Therefore, what I'm gonna do before the 26th, I might position myself, especially if Nvidia continues to fall like it did this week. I'm gonna keep buying the dip because I know it's temporary. That's my opinion. Not an expert here, guys. I'm just telling you my opinion. I think it's temporary. Why do you think that, Richard? Because I've seen this play before. I've seen this play many a times before the 10-to-1 split. I've talked to you guys about this several times when Nvidia has had a huge swing down. And then all of a sudden you see a huge swing back up, right? So I've seen this play. This is not a new play in the playbook. I've seen this with Nvidia many, many times. That's why I don't panic. I'm like, guys, I already told y'all, this is how this stock is. It's volatile. I keep telling you, it's volatile. It may go from 140 one day down to 110 the next day. It could, but it also could go from 110 to 160 in one day. But you got an annual meeting coming up, which might If good news comes out of that annual meeting and investors like what they talk about and what's coming down the pipeline, this thing trading at 126, it could go back to 145. If the market says we loved what they talked about, we love the product set that's coming, boom. Next thing you know, it done ran back up to 145. So all I'm telling you is this annual meeting might be an opportunity for somebody that has the nerve, got the financial nerve, right? It might be an opportunity to make some cha-ching. That's all I'm saying. If you got the financial nerve to pull the trigger on this thing prior to the 26, I don't know, you might get a little bit of upside, just saying, right? Because we know all eyes are on the video. All eyes are on the video, right? So here we go. But it's still an important event that could help shed light on what the future holds for Nvidia and the market as a whole. Again, the AI market goes where Nvidia takes it. That's right. See, the AI is just a part of the tech industry, guys. It's not the whole tech industry. And I think some people get that confused. It's not the whole tech industry. It's just a small little, it's a baby part of it right now. Could grow into a giant oak tree, but right now it's a little acorn. It's a little bit of acorn in this big old gigantic tech forest. It's a little acorn. But boy, that thing could grow into a monster oak tree here, man, in the next 10 years. It could be a monster oak tree. And that's where the opportunity lies, guys. Tech is gonna forever be with us. The question is, how big will this little acorn called AI become over the next 10 years? And is that an opportunity for you and I to hitch our wagon to this AI revolution led by Nvidia? Is it an opportunity for us to 3x, 4x, 5x, 10x our net worth? And are we willing to have the financial nerve to do it? I don't know. You got to answer that question. I can answer it for me. I'm all in. I'm all in. 20% of my net worth, all in. Other 80%, I'm skeptical. I'm going to protect myself because I can't start over no more. I'm 56. Ain't no more starting over for me. I refuse. I will leave some of the upside on the table for others before I start over again. That's why it's important in my portfolio that I stay equity diversified. That's what I call it. Equity diversified. I cannot be equity concentrated. Not at my age. Maybe you can if you're younger and you got 20 years to recover. I ain't got no 20 years to recover. I ain't doing no more recovering. So here's the thing for me. Equity diversification, not equity concentration. 80% over here in equity diversification, 20% in equity concentration. Get it? Right. Oh, some of y'all might say, well, golly, Richard, I don't care what, that's still concentrated. You're all in equities. Yeah. But I'm in the S&P 500, man. So I'm in good shape. I'm in good shape. Plus I got 10 years. I got 10 years. But I'm watching this thing like a hawk, man, at 5 miles up in the air, like you watching a little rabbit run around. That's me. I'm watching this thing like one of them big old hawks or a big old bald eagle. Right? I'm watching this thing every day. I'm in the financial space. I ain't going to sleep. I'm not going to sleep. Right? So I'm watching this thing just to see what's happening. Right? That doesn't mean we won't have a correction of 20%. I'm okay with that. We'll recover. Right? We'll recover. But the way I protect myself, guys, is I have equity diversification. 80% equity diversification, 20% equity concentration, right? That's how I keep myself out of the weeds. right? That's my little weed eater. Let's keep going. So, with the meeting fast approaching, is it a good time to hop on board the Nvidia train? Here are 3 reasons the stock still looks strong. I love that word, strong. Number one, Nvidia has a lot of cash to play with. As the company has skyrocketed to stardom and proven how lucrative the business is, its competition wants a piece of that profit. The threat of an AMD or Intel catching up and eating into that roughly 80% market share Nvidia enjoys is real and should be taken seriously. However, Nvidia has major resources to defend itself through constant innovation. See, that's where Nvidia is so good, guys. These folks are innovating all the time. They got the Blackwell coming out. Then they got the Rubin coming right behind that. They already got the H100, the H200, the data centers. They're going into the automotive space. They're always, that's why I told y'all, in my opinion, guys, there's no way AMD, Intel, SMCI, Broadcom, none of them catch up with these guys in 3 to 5 years. Maybe 10 years, but 3 to 5, everything these folks got in the pipeline, just no way they can catch them, not in my opinion. Here we go. In tech, having the best product goes a long way. See, it ain't like Walmart and Target. Oh, golly, Walmart has that same widget Target has. Okay, Target, you don't want to sell it to me for $5 cheaper? I'm going to Walmart. It don't work that way in this world. Don't work that way. See, people don't mind paying top dollar for the very best technology. See, companies like Meta, they not finna skimp. They don't care if you're offering it for $20,000 less a GPU. They don't care about that. What they care about is what? Efficiency, speed, the very best. They go ahead and pay for it. See, in this industry, unlike Walmart and Target, they can squabble over, who can go the lowest. That ain't how this industry works. Now, here's the one caveat. If any of these companies behind the video can catch up and give a better product at a lower price, Nvidia's in trouble. But all that old crazy stuff that they're making right now ain't no better product. They can have it at the lower price if they want to. You think Meta is gonna buy something inferior because a cheaper price and their 2.5 billion people on their platform have a bad experience? That's a nightmare, guys. They're not gonna do that. Same with Amazon, same with Alphabet, same with Microsoft, same with Tesla. The only way you get these guys is you gotta have a better product and it gotta be cheaper. Right now, you can make a product cheaper. The problem is your product isn't better. So it doesn't matter. You can make a cheaper product, but it's not better. And in this world, better is always better. You hear me? You heard, better is always better, and you can charge for it, right? In tech, having the best product goes a long way. AMD and Intel need to produce a product comparable to Nvidia's if they hope to chip away at this market share. And right now, they ain't done it. Y'all can say what you want to say. Oh, golly, AMD. Well, hey, man, AMD gonna make money, but that's fine. I gotta go with Nvidia. I ain't got nothing against AMD. I ain't got nothing against Intel. I'm actually gonna buy some Broadcom next week. Once the 10-to-1 split hit, I'm gonna throw a little something at them. I'm gonna throw a little something at them out of this equity concentration money that I got. I'm gonna throw a little bit at them, but it ain't gonna be no big boy money. No, the big boy money goes to the number one in the game. the 80% market share holder. That's where the big boy money goes. But will I go ahead and hedge myself a little bit? Hedge a little bit? I'll hedge a little bit with Broadcom. Ain't got no problem with hedging a little bit. Might hedge a little bit with SMCI. I might hedge a little bit, but it ain't gonna be no big dog dollars. The big boy money going into Nvidia because they're the best of the best. And that's how I've been over my 30 years of investing. I only go with the best of the best. I only like dealing with number one in the industry. That's how I keep myself safe. 9 out of 10 times I'm gonna be safe if I go with the number one in the industry, especially when you got this big of a lead, right? So let's keep moving. AMD, Intel need to produce a product comparable to Nvidia's if they hope to chip away at its market share. This takes money. Some of y'all watch me every day. Some of y'all watch me every day. And y'all know I've been telling y'all, because a lot of people saying, oh, golly, Microsoft gonna produce their own, Amazon gonna produce. I told y'all guys, this ain't no, You need billions and billions of dollars in R&D, man. And it takes years to catch up to these. You think Microsoft got time to do all of that? That ain't their core competency. Microsoft better stick to software and Windows and PCs, and that's what they need to stick to. Don't be trying to catch these guys. That's a waste of money for you. Same with same with Meta, same with Amazon. Waste of money. Because you're going to develop an inferior product. You can't just roll out the bed and say, well, okay, I'm a retail giant, but now all of a sudden I'm a chip maker. You can't just do that. Not in this industry, guys. You can't be Amazon where you right here, selling stuff online, and all of a sudden now you're a chip maker and you finna compete with Nvidia. Come on, man, that's ridiculous, right? It's ridiculous. So all I'm telling you is, you gotta throw billions and billions and billions and billions and billions of dollars in R&D. And that stuff takes years to catch these guys. So how they gonna catch them in 3 to 5 years? They're not. And that's where I plan to get rich. In these next 3 to 5 years, before they catch them, I'm gonna get rich. Period. I'm gonna get rich in 3 to 5 years before they get caught. Now, will they get caught? Yes. But it ain't finna be in the next 3 to 5 years. That's my opinion. So here we go. This takes money, a lot of it. AMD spent $1.5 billion in research and development last quarter. And they still don't got a product that can compete. Spent $1.5 billion in 3 months. I keep telling y'all guys, billions and billions and billions and billions of dollars, man, to catch these guys. So for me, when I think about the AI revolution, it's led by Nvidia. Now, don't get me wrong. If the market won't embrace it and nobody won't buy it, then I don't care how good your product is. If you don't got nobody will buy it. But right now, they got buyers. They got 100 customers or more. And they got like 5 of the Magnificent 7 companies buying from them. I don't know. We'll see. Let's keep moving. While Nvidia spent $2.7 billion. Remember, Nvidia is already in pole position. You ever see NASCAR or Formula One? And you see that joke up there in the front? And all them jokers behind him? What does that mean? What does that mean? When he in the front and everybody else behind him, he the 900-pound gorilla. They got to knock him off. You got so many miles around this track to knock him off, but he the dog. He the top dog. He the top dog. Nvidia the top dog. That's all I can tell you. They the top dog. They the pole position. They in the pole position. They are the top dog. And here's the thing about the top dog. I told y'all this before. See, these top dogs, man, they're aggressive. They untamable. They just will bite anything. You can't even, when you get around a top dog in any profession, in any walk of life, if you're a top dog or if she's a top dog, that means they're the best of the best. And that's what Nvidia is in this industry. Best of the best, right? Remember, Nvidia is already in pole position. It has the best tech on the market. See, guys, here's the thing. When I'm buying investments, I like that right there. I want to be top dog. I want to be in pole position. I want to have the best product and can charge a premium for it. Will it always be that way? Probably not. But these next 3 to 5 years, it ain't going to change. It's not going to change, guys. Not these next 3 to 5 years. Not these next 3 to 5 years. So remember, Nvidia is already in pole position. It has the best tech on the market, and it's still outspending AMD almost 2 to 1. They already got the best tech, and guess what? They still spend more on R&D than the guys behind them. Now, how in the world are you gonna catch these dudes? They already making a killing, triple digit everything, 4 quarters in a row, $3 trillion market cap, and they still spend more money than you. What does that tell you about that company? They're aggressive, top dog. They're saying, you know something? We the best of the best, but we ain't resting. We're gonna bury them. That's what they're saying in the board meetings about these other companies. We're gonna bury them. We're gonna wipe them off the face of the earth. And I know to some of y'all that sounds, oh, what is this guy talking about? What is he talking about? Guys, I keep telling y'all, this is America we live in. It's a dog eat dog. You eat what you kill. And I'm not saying that in a harmful way to human beings. I'm saying that in a business sense. In this world that these guys living in, this company ain't no friends. Ain't no friends. And I love that. Why? Because I need my money multiplied. And I want a top dog. I don't need some friendly little poodle running around here trying to lick somebody's ankle. I need a pit bull that's going to rip their ankle off. Not no little poodle that's want to lick and... No, I don't need that. I need a pit bull. I need a top dog. And that's what Nvidia is. Here we go. Intel, on the other hand, is outspending both. So Intel, now y'all know Intel, they've been around for a long time. Intel has been around for a long time. Great company. Great company. They're spending more than both of them. Intel spent $4.4 billion last quarter. Here's the question. Can they keep that pace up? Can you keep that kind of pace? 4.4 billion on R&D in 1 quarter? Can you keep up that pace for the next 3 to 5 years? Because that's how long it's going to take to catch these guys. Can you keep up that pace? I don't know. I don't know. That's the question, right? That's the question. The catch here is that this spending is putting Intel in the red. Oh, I knew it was coming. I knew it was coming. I knew it was coming. I knew it was coming, guys. I knew it was coming. I knew it was coming. The next sentence, I knew they was going to say it was in the red. I just told y'all the sentence before. I hadn't even looked at it, guys, but I've been doing this for a long time, guys. So I knew what was coming. I just told y'all. How long can they keep that pace up? You're talking about $4.4 billion in 3 months. And guess what? Right behind that, the catch here is that this spending is putting Intel in the red. How long can they keep it up? Boy, I gotta tell you, I just knew that was coming. I knew they was gonna say that. See, here's the thing, guys. Here's what you gotta understand. I get you trying to catch these guys, but you're gonna throw the baby out with the bathwater here in a minute, Intel. You're going to mess around and be in bankruptcy. You're going to throw the baby out with the bathwater. You're going to end up in bankruptcy trying to mess with these dudes. Sometimes you got to know when to say, that's the top dog. Let me back off, make my little money, and be happy. And then there's times when you know you can attack the top dog. This ain't the time to attack the top dog. Not right now. Not right now. This is not the right time to attack the top dog. You might put yourself in bankruptcy. You're going to put yourself in bankruptcy court. So all of y'all out here buying Intel, you better go look at the numbers. You better go pull them balance sheets and them income statements. You better go pull them earnings reports and see what they're doing here. They're spending a lot of money in R&D and they ain't making no ground. So whoever invested in Intel, you better go look at them books. Better go look at the books. Here we go. Take a look at this chart, which we're not going to take a look at. But basically it says this: free cash flow for these companies is a company's income after you subtract operating expenses. That's free cash flow, right? Free cash flow. Let me read that to you guys again. Take a look at this chart showing the free cash flow of these companies. Free cash flow, FCF. That's a term you guys can put in your little terms book. Get your little terms book and throw that in there so that you know the next time somebody says it, you know what it means. So here we go. Free cash flow is a company's income after you've subtracted operating expenses, right? And capital expenditures. So what are operating expenses, right? Payroll, light bill, right? Everything it takes to run that business. That's operating expense. Everything it takes to operate that business. What are capital expenditures? When I got to put a new roof on the building, or I got to build more buildings, or I got to bring in more air conditioning units, or I got to do so. That's capital expenditures. So not is it just your regular G&A, general and administrative expenses, but you got to also throw in there capital expenses, which are large expenses, right? Depending upon how big the business is. And a business like Intel is a big business. So their operating expenses and their capital expenses are huge. Plus they spending $4.4 billion in R&D to try to catch up to the top dog. Let's keep moving. Right? So free cash flow is a company's income after you subtracted operating expenses and capital expenditures, right? Just think about a rental property. I buy a rental property. What are my operating expenses on a rental property, right? It's property taxes, it's property insurance, it's regular routine repair and maintenance. So what would be a capital expense? I got to put a new roof on the thing. That's a capital expenditure. What's a capital expenditure? I got to replace. Not things you got to pay for every year is what I'm saying. Normal operating expenses are things you pay for every year, not capital expenditures. You pay for them every now and then, maybe every 10 years, every 5 years, right? Those are capital expenses. So, hey, free cash flow is you subtract those things, right? That'll give you your free cash flow for a company. It'll give you your free cash flow. So in your personal budget, you got your income coming in, that's your revenue. I don't know what's going on here, guys. Sorry about that. I had a little bit of hiccup. Boy, I tell you, this internet around here is crazy. Can y'all hear me? Somebody give me a little something. Let me know y'all hear me. Okay. Somebody give me something. Let me know you hear me okay. Anybody in here? Can y'all hear me okay? I know we got a little bit of a delay. I'm gonna keep moving. Y'all let me know if you can hear me okay, guys. Sorry about that. So let me wrap this thing up. So here we go. Free cash flow is a company's income after you subtracted operating expenses and capital expenditures. The money a company spends to grow, and it is indicative of how much headroom a company has if it wants to say increase R&D spending. All right, let's go to the second thing. Second thing, the market as a whole is growing rapidly, right? So 3 reasons why you should buy Nvidia. Number 1, let's go back to number 1 so that we don't miss that. Nvidia has a lot of cash to play with. We talked about that. Second thing is the market as a whole is growing rapidly. They're talking about the artificial intelligence market. That's growing rapidly, right? That is growing rapidly. So if you accept that Nvidia has the resources to defend itself from its primary competitors, we can assume Nvidia can maintain or grow its market share. These are certainly more factors, but it's not an unreasonable assumption, right? So that's the market as a whole is growing rapidly, and Nvidia, like I said, has that 80% market share. Statistica.com predicts a compound annual growth rate for the AI market at large is about 28.5% through 2030. That is a seriously quick rate of growth, albeit slower than the lightning speed at which the company has been growing recently. Still, this would be an incredible growth rate to maintain. So 28.5%. Right? This is an estimate for the entire market, not just semiconductors, which are Nvidia's bread and butter. So this is very rough measuring stick. The semiconductor segment could have a lower CAGR rate than this. However, this brings me to my next point. So there's the first two reasons why potentially you should buy it, right? You got a big old gigantic market and it's growing. And then obviously Nvidia has all of this cash so that they can stay out in front through R&D, developing new product. And then here's the third reason. Nvidia isn't sitting on its laurels. It's expanding its revenue streams. So that's number 3. Nvidia isn't sitting on its laurels. It's expanding its revenue streams. There's no doubt that what has led to Nvidia's massive success as of late is the sale of its powerful AI enabling chips. But the company sees a future beyond this. They just don't want to be just pigeonholed in that as a chip maker, right? They want to do more things. Just don't want to be a chip maker. So Nvidia, here it is right here. But the company sees a future beyond this. Nvidia is attempting to build an entire AI ecosystem. It is partnering with companies like Dell to offer full-scale, on-premises AI computing solutions. Wow. It is building technologies and end-to-end platforms designed for autonomous vehicles, humanoid robots, and drug research. There's more, but I'll stop here. The point is that Nvidia intends to position itself as the very center of all things artificial intelligence, as a star that other companies orbit, rather than just one more link in the chain. It's powerful, guys. That's powerful. So those are 3 reasons why you should consider Nvidia. 3 compelling reasons. Just a quick recap and then we're going to move on. Actually, I'm going to close out this thing here in a second. 3 reasons. Let's look at that one more time real quick. 3 reasons to buy Nvidia stock before June 26th. Number 1, Nvidia has a lot of cash to play with. So they got a lot of cash to be able to put into new product development and stay ahead of the competition, Intel, AMD, right? Number 2, the market as a whole is growing rapidly and they control 80% of the market share in a fast growing market. That's great. That's great for them. And then the third thing, Nvidia isn't sitting on its laurels, it's expanding its revenue systems, partnering with Dell, trying to come up with a full stack artificial intelligence ecosystem. Just crazy stuff, man. Crazy, crazy stuff. So that's why a guy like me is investing in Nvidia. That's why I don't worry too much about when I hear what I've been hearing lately. I don't worry too much about that. I do my very best to just keep my head on straight and keep moving forward. So that's sort of where we're at, guys, with that. Hopefully that information, you'll take it and do something with it, right? You'll take it and do something with it. I just think at this point, you got to make a decision if this is something that you feel like is right for you and will benefit you. I think for me, it's definitely will benefit me. It's right for me, and I'm gonna move forward with this 100%. 100% move forward with Nvidia. Like I said, I'm not gonna tie all my eggs up into one basket. I'm not gonna do that. I am gonna stay diversified, but I am gonna continue buying Nvidia and not worry about this .com bubble thing. I'm not gonna worry about that. I'm just gonna go ahead and push forward and do what I need to do in order to make this thing, make it work. So hopefully you will figure out what you need to do and act accordingly. I'm gonna go ahead and definitely do that for myself. And like I said, I had a little bit more I wanted to go through with you guys, but the hour went so quick, so thank you. We'll cover some more of this stuff tomorrow in my 10:30 a.m. live stream. We'll cover the other two topics I wanted to cover. We'll cover those tomorrow. I hope you guys are having a wonderful weekend. And like I said, man, you know, figure out what your game plan is. Figure out what you're trying to get accomplished, and see if Nvidia and other stocks, other ETFs can assist you and help you get there. That's the main thing, right? See if they will assist and help you get there. Like I said, guys, if you're 18 to 80, you want to take advantage of this opportunity, but you don't have a brokerage account, or you don't really know how to use a brokerage account, get down in the description box, click on that Moomoo link, open up your new Moomoo account, go ahead and put $100 in that Moomoo account. You get 5 free stocks. If you put $1,000 in your Moomoo account, you get 15 free stocks. Now you got to do all of that right away. You can't open the account and let it go dormant for 2 months and then come back and try to put money in it. You got to do this right away in order to qualify for the free stocks. But if you're willing to do that, then definitely get down in that description box, click on that Moomoo link, open up that Moomoo account today, go get that free stock, go get that free money. And then through my website, www.richardfain.net, second link down in the description box, send me an email through the website to let me know you've opened the Moomoo account, you funded the Moomoo account, and then I'm gonna go ahead and send you the Moomoo tutorial videos. It's 2 of them. One will walk you through fractional share trading so that you know how to use that feature. And then I'm gonna send you my 2 wealth transfer blueprint videos outlining all the paper assets that I'm buying, not just Nvidia, but everything that I'm buying, so that you got an idea of what I'm doing. I'll send you all of that for free, no charge, none of that stuff. Just open up the Moomoo account, put you some money in it, and then send me the email through my website, www.richardfain.net, second link down in the description box, and then I will send you out those tutorial videos and the wealth transfer blueprint videos 1.0, 2.0. Well, thank you guys for watching. Hopefully this internet thing didn't cause too much of a problem. I don't see any comments coming through, so I don't even know if you guys are still can hear me or see me or I tell you, man, these last couple of days, my internet's been crazy. I don't know what's going on, but we're gonna get it fixed. Appreciate y'all rocking with me. Hey man, hit that thumbs up button if you guys can still hear me. Hit that thumbs up button for me before you get out of here. Maybe you can see me, but you might not be able to hear my voice. I don't know, man. But I don't see any comments from you guys, so I'm assuming you're gone. But it looks like I'm still on here, so I'm gonna end it right there. Like I said, lock it in with a thumbs up if you don't mind. Thoughts become things. See it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. I'll catch you guys on the next one. Peace.